record on this. So hi all, welcome to Diversified Finance. My name is Lakal. So today this is the fourth Zoom session we're having today. So we're gonna discuss a few topics. I'm gonna show you the topics right now. Just give me a sec. Okay, so today we're gonna discuss under investor attitude, what we should do before buying any cryptos or any kind of asset class. And Sheehan gonna walk us through regards to superannuation, kind of like an overview. And Shamira will explain to us about these technical charts, ascending, descending, symmetrical triangles, and also gold and silver charts and Dow Jones. And we're going to discuss some few altcoins that we think which has like a potential to go up. So okay, let's start off from topic number 1, which is investor attitude. And today we're going to discuss under investor attitude. We're going to discuss before we buying an asset, the steps we need to take before we buying any kind of asset. It could be crypto, it could be shares, or it could be gold and silver, any kind of asset. So step number 1, we need to check the price action. So this is really important. We need to open up a chart. Either you can do it yourself, or if you don't know, if you're not very familiar with charts, if you know someone who's good at it, you can ask him to have a look at it for you. So first of all, look at the price action, and RSI is a technical indicator that we use, which is like it is relative strength index. So by looking at it, we can have a bit of idea whether it's overbought or oversold, or whether it's a good time to buy or good time to sell. So this is like a really good indicator. But probably once we go through our topics, if you are new to the group, we already discussed about RSI last week and the week before. But if you're new to the group, we'll go through these technical indicators later on. And then the next one is price against BTC. So let's say this is only for cryptocurrencies. You can also use it for gold as well, even the Dow Jones. You can look at the particular altcoin, and then you can look at the chart against BTC. And if it's like Ethereum token, you can look at it against Ethereum. So that's something you can do. And daily volume, you can go to coin market cap. Coin market cap. It should be coin market cap here. So you can go to coinmarketcap.com and then look at the daily volume. You can check whether there's enough daily volume for this particular coin that you are planning to buy. And you can also look at the circulating supply and total supply. So if you see like a coin which is really cheap, then you know the total supply and the circulating supply is really big. That's why the price of the coin is cheap. So something like that. So you just have a bit of idea of the coin that you're going to buy before you investing in this coin. So the next step, the next one would be check fundamentals. So let's say, for example, you're planning to buy Ethereum, right? So first of all, you need to do bit of due diligence, and then need to find out whether this coin has a lot of fundamentals, like positive fundamentals, and so that you get an idea, what it does. It really does, and then you need to find the reason. So once you look at the technical side, and then once you okay with the fundamental side, then you need to come up with a reason, like am I going to invest in this coin, or this is like a swing trade, or I'm going to hold it for like a few months, and then when it goes up, I'll make a profit and get out. So you need to decide what you're exactly trying to do. And simply, if you're trading, if you're just not worried about investing, if you're like a trader, then you can always rely like 70% on the chart rather than looking at the fundamentals. So fundamentals does not matter much if you're like a trader. So you can fully, like 70%, you can rely on your charts. And if you're a trader, but if you're an investor, yes, like you need to look at fundamentals and also the technical charts as well. And the next step would be more research on YouTube. So more research you do, better you get to know about this coin, because there are as you know, there are a lot of scams out there. So sometimes you don't even know whether that there could be a scam. So if you've done enough research, then you would probably have idea, okay. Yeah, so if you done enough research, so you don't need to worry so much about this coin. So you know that you've done enough research. So you can use YouTube. Like I've learned so much through YouTube, not just fundamentals and technicals as well. So you can do further research. And then by doing so, you can justify your actions, like, you know, okay, the decision that I'm going to take, I'm going to invest in this coin, and it's not a bad decision given that these fundamentals are looking good, technical charts are looking good. It's a pretty good coin and has the potential to go up in value. So that's the next step. Okay, so once you have done all that, the next step is the most important, I guess. I think, not I guess, I definitely believe so. So this is called DCA. So you've done enough research now. So you know, you picked up one coin. Say, let's say, for example, here I've taken XRP. So you're going to choose XRP as the coin that you're planning to buy. So this is DCA, means dollar cost average, right? And I'll explain to you later what it means. And the other one is dollar value average. So there's two ways you can accumulate this coin, right? Here, later on, I'll explain what RSI is if you are new to the group. But here we're going to consider RSI high to low. Simply RSI is also, you can consider as price. So when price is coming from a higher level to a lower level, this is where we're going to DCA, dollar cost average, buy, and dollar cost value average buy, right? DCA and DVA. So the first one is dollar cost average buy. So this one is pretty easy, like, you know, anyone can do it. You don't need to worry too much about the charts. Let's say you picked up, you've done all the research and you're gonna invest, let's say $4,000 in XRP, right? So you look at the price at the moment, let's say it's $10, and then RSI is high. That means, like, you know, you're starting from a higher price and you're planning to accumulate this coin for a long term. So say you're going to invest 4,000, you take 3,000 out of that, not the whole lot, the 3,000, and then it's like 75% you're going to invest right now. So what do you do when XRP at $10? You just put like $500, right? And next day or a few days later, it drops to like 105, you add another 500. So likewise, at 95 cents, 90, 80 cents, 70 cents, you keep on adding a similar amount, like $500. You don't need to worry too much about the charts or anything. You just dollar cost average, and the total is $3,000. So average price is, you add all these prices that you bought Ripple at, and you divide it by 6. So your average price becomes 92 cents. The reason we do that, let's say at $10, you're going to put $3,000, right? But if you do that, what happens next day? If the coin drops by 10-20%, right? Then you won't have any extra money to get back in. So that's why we do dollar cost average, because it's really important. So you can average your price on the way down. So next time when XRP goes back up to, say, 93 cents, 92 cents, you break even when it's at 92 cents, right? So, but if you bought everything at $10, you have to wait until it recovers all the way back up to $10. So this is dollar cost average. You just put similar amount on the way down and accumulate for a long period. Like, let's say it could be within 6 months, it could be a year, depending on, like, could be 3 months, or depending on your time frame. So this is dollar cost average, DCA. And the other one is DVA, dollar value average. So in this case, it's kind of the same thing. The only thing is, on the way down, you increase the amount that you buy. For example, at $10, here you spend only like $500, but here at the start, you're just gonna invest only 250 instead of 500. So because the price is RSI, we starting from a higher RSI to low RSI, higher price to lower. So we expecting price to go down. So at $10, you put $250 and buy buy XRP at $10 with 250. And likewise, you increase like 350, 450, 550, 650, and 750. So here you at 70 cents you bought only $500 worth of XRP, but right now here you buy 70 cents at 70 cents, $750 worth of XRP. So the total is 3,000. It total is the same, but only good thing is because on the way down you increase your capital, like increase your investments. The average price becomes a lot less compared to a DCA average price. So here you got 92 cents, but here you have only 87 cents because you bought more XRP at a lower price. Right. So I mean, it's very easy. This is easy math. So $10 times 250, you get 275, and then you add all that, and then it becomes 2,610 divided by 3,000. That's how you get 87. So this is like easy math. So you can see the difference of DCA, because it's very important to do DCA and DBA instead of like going all in, putting all your money at once. So DCA, DBA is really important. DCA is quite easy. You don't need to worry too much about the price, because along the way you just put like regardless the XRP price, you just put 500. DBA is a bit different. Along the way you just increase the capital that you invest in order to get like a lower average price. As you can see, it's 87 compared to 82 here. So that's that. So the next topic is, there's these points are very important. So at the same time, we need to understand that we cannot pick the bottom price. Like say, for example, you buy, say, at 70 cents, right? XRP could go even lower, right? But it's okay, like, you cannot pick the very bottom, right? We cannot pick the very top. But as I said earlier, we out of $4,000, we only going to invest $3,000. Why? Because in case if the price keeps on going down, you can use that $1,000 and DCA, DVA. That's why from the initial amount, we only going to invest 75% at the start, and we keep $1,000 aside just in case if the price keeps on dropping. You can do further DCA and DVA. That's why we invest only 75%. And also we need to understand we cannot pick the bottom price. Even if you DCA, DVA, still price could go down. Same way when the price goes up, like even if you sell and take profit, it could keep on going down. So that's why we're not going to sell all at once. We're never going to sell all at once, or never going to buy all at once. So always have some cash. So that's what I mentioned. So regardless of what your strategy, always have some cash aside, because if you're wrong, you have more firepower to get back in. And specifically, do not go all in. If you say one of your friends just told you about some kind of a coin, you look at the chart and then don't put all your money in there, because if the market goes down, if you don't look at the technical charts, and then if you don't have a bit of idea of what's happening with the price action, if you're not familiar with the RSI, if you bought at a higher price and you go all in, next day it might drop down by 50%, and then it's going to be like you might panic sell. So it's not like a good investment strategy. And once you bought your coins, the next thing is you have to make sure you send it to like a Trezor wallet, because it's very important. Like, don't leave your coins on an exchange, because if something goes wrong, if the exchange get hacked, or if there's like too much traffic, you can't log in, then you have no access to any of your coins that you bought. So once you got all these coins, it's better to have, depending on how much you're gonna invest in crypto. Like regardless, let's say you're gonna invest $5,000, it's better you protect that investment. So you can buy, especially if this is for cryptocurrencies, you can buy like a Trezor and a Ledger Nano S. It's just the same thing. There are offline wallets. You can buy them, and then you can send your coins to these wallets, and you can keep them in there. So I can show you. Let me share the where you can buy a Trezor wallet or a Ledger Nano wallet if you're planning to do so. Let's go here. Yeah, so this is the official website. So make sure you buy it only from the official website. Don't buy it from anywhere else, because there could be like scammers, like, you know, trying to take your coins out of the wallet. So this is the official website, which is trezor.io. Also, this is another wallet. Just the same thing. Ledger Nano, it's called ledger.com. This is the official site. You can go here and then apply for a external wallet. So you can transfer all your coins from exchange to a wallet, and you keep it with you, like for safekeeping. Yeah. So I think that's it under investor attitude. So let's move on to Sheehan, if she is ready. Sheehan, are you ready?
Yep.
Yeah. Okay, please.
Hi, everyone.
Yeah. So let me just share the screen for you. Give me a sec, please. Okay, now Sheehan's going to discuss about superannuation, which is like a very important topic. Okay, thank you, Sheehan. Take it away, please.
No worries. So, guys, today we're going to talk about superannuation in diversified finance. It's very important because we're talking about your retirement. End of the day, they can be the last resort for you. Just say you got broke on everywhere that you can. So we're looking at investing, right? Diversifying, getting everything done. And end of the day, it can be the case you're bankrupt. Or, end of the day, this is what you got. So I think it's important that you have a good understanding of where your superannuation doing, who they are, and what's happening with it. Because if you have a firm understanding of superannuation, then you know you're not leaving under someone's hand. You don't leave your money under someone's hand, right? You don't leave your money under anyone's hand. So any investment under anyone's hand, you try to get. That's the whole point of you joining this forum and you're talking today with us, right? But superannuation, most people tend to look at oversight that, say, we'll look at it and say, well, someone's just doing something and I'll just wait. And when I come to that retirement age, I'll get it done. That's the attitude. So today, what we're going to do is we're going to actually do it in a few sessions because we can't cover. It's a huge topic, right? So today we're going to just do the overview and let's see how we go with the overview.
Yeah.
So, first of all, I'd like to talk about the superannuation industry. It's a $3 trillion industry as of March 2021. So it's a huge industry compared in Australian, when you talk about the Australian economy and Australian treasury, because there's a lot of effects happen. And as you can hear, this could be a huge news in your day-to-day. If you think about that, if something happens, superannuation, or if shares goes down and people talk about superannuation, because everything relates to retirement, and a lot of people got their superannuation under certain funds. So what happened is a little bit of history here. In 1992, in the Keating Labor government, they made superannuation compulsory. So what that means is that all employers need to contribute to their employees a certain proportion from the wage to superannuation. Now, since 2002, it has been 9%. But from 2021 to 2025, they say you can go from certain amount, like 12% to 15%, and then it holds until 2025. So that's where you are. Now, the way that superannuation work is that obviously when people are motivated to put superannuation contributions, the reason for superannuation contribution is that it can be tax effective. Now, how it can become tax effective, just a small elaboration on that, is that when you say you're earning a certain amount of, just get an example, let's say you get 100,000. Now, if you get 100,000 wage, what happens is that you get taxed for the 100,000 depending on your tax brackets, right? So there's the tax-free threshold, and then there we go on in percentage point of view. However, you can do by doing contributions to your super, you can reduce that, because what they do is they calculate the superannuation, the tax, the way they calculate tax is that they say, okay, here's your wage, here's the amount that you contribute. So the way the gross wage minus the contribution is your actual taxable wage. So that's how they tax. So anyway, that way it will be tax effective. The disadvantage of that is you can't touch that amount until you retire, right? So you have to wait for that period. Okay. All right. The next point is that recently they've started accumulating lost super, which is very important, because lost super, you're basically what lost super means is that, say you start with a superannuation fund, say superannuation fund A. You are in the superannuation fund A, and then you move to a new employer. When you move to the new employer, there's a default super in the beginning. You can't change the default super. You have to go there and then nominate the superannuation and so forth. That's what used to be, so forth. I'll explain you. There's a new system coming up. Anyway, so what's happening is with the lost super is basically that superannuation fund A, you forget about it. Now, superannuation fund B is your new super. You go on, you don't care as usual. And what happens is that there's an administration fee. So you're not putting any money to superannuation A, you're accumulating money in superannuation B. However, superannuation fund A gets deducted very often, because if it's not making any money, for example, if it's a global financial crisis or so forth, you would not accumulate much money. What's happening? There's admin fees there. Administration fees come into place, and you're basically reducing your superannuation. You're eating up your superannuation by administration fees. And that's why there's a need of collating that lost super into one superannuation fund. So we'll talk about it later, about how to accumulate and make sure everything's okay. Now, before we go to the next slide, I'll just give you a small indication. There's an indication that an employer from the future, coming days, is the employer can't nominate a default super. So they can't say, this is our favorite super fund, just join us with this. Initially, that's what you used to do. You join the superannuation fund, and then you say, this is the story. Now what we're going to do is the new rule says, if you're a new employee, you have to nominate a superannuation fund. So that can be your superannuation fund A that we discussed, right? So you don't need to have a superannuation fund B. So there is no lost super in that case. So that's a good advantage. So if you go to the next slide, please. There you go. So these are the types of superannuation funds that you would get in your normal day-to-day. Now, there's retail super funds, which, the banking super and all these places that offer you super funds and say, hey, let's go, join us, we give you this, we give you that. That's superannuation. They promote, there's so much into it to put it to your head. Next one, basically industry superannuation funds. So industry superannuation funds, the important about industry super is that there's low fees. So basically low fees means more gains in your super. So it increases the super. So most people are happy with industrial. I'm with the industrial super fund, with Australian super, and I find it really intriguing because I use it in a way. So the next one is basically, we got public sector. I'll come to self-managed super fund later, but there's public sector super fund. So in New South Wales, it's called state super. So in state super, you've been allocated the super fund, which is intriguing as well, because they give you a certain amount percentage, which is really intriguing. Good. There's UniSuper sort of thing, which also universities offer. Again, I think that's really good as well. Then we've got corporate super funds, which is basically for businesses. So businesses would have corporate super funds where they would, if you have a huge amount of employees, you can nominate, say, let's get a best deal for these employees, sort of thing. So that's called a corporate, and it's not for everyone. And it may have issues because if you do not have a business, you may not be eligible for a corporate super fund. The final one I would like to discuss is a self-managed super fund. Now, this is for people, now it's like a trend. Oh, I can do self-managed super fund. I can go and do this. I can go and do that. I'm going to take it to my hands. Yeah. And it can be also a trap. because you can get into a debt where people may say, think, oh, property market's going to go high, this market's going to go high, that market's going to go high. And we know everything is a cycle. It's not property, it's not crypto, everything is a cycle. So if you take something to your hand, make sure you know what you're doing. If not, you're better off sticking with the same benefit and do contribution. So that's basically, those are the types. So if you go to the next slide. Now here in this slide, you can see the allocation of superannuation. Basically, the total of superannuation. Remember the one that I just mentioned about the $3 trillion market cap, and this is how the $3 trillion market cap has been established at the moment. Now you can see there's the retail funds, because as I mentioned, why do you think 33.3 is retail funds? Simply because they market. You go to a bank, you talk about your savings account, and they say, hey, while you're doing our savings account and you got a home loan, why don't you join our superannuation fund? So that they promote their super. So that's why it is a huge superannuation. Now, because people don't check they don't go on marketing, they don't go and checking other things, right? So the other thing is we got the self-managed fund. Again, it's a trend. Because it's a trend, you can see it's growing there. And then you can see a little bit, because it has been a little bit, but it has grown tremendously during these years. And you can see the public sector funds, because people try to stay. If you're in public sector, you would try to stay there. Now, I was in state super before, and I found industry super far more better for me. And I'll explain that next week. We'll get into that. There you go, industry super funds. It is also highly marketed. So you can see it's the 15.5 industry super funds. And corporate super, as I mentioned, it's not easy to get into corporate super unless you're in a business, unless you have some sort of thing that you need to do. There's no point. So there's other as well. So there you go. That's the total distribution of the $3 trillion market. Okay, let's go to the next slide, if we can, please. There you go. So we're going to talk about how these types of super, when you're taking a decision, let's take a proper decision. Let's look at this properly. Now, you can see the flexibility of super. So if you're doing a self-managed super fund, it's a very high flexibility. You can, it's under your control, basically, right? And industry super funds, you can see there's medium to high, because obviously, basically, both over there in industry, retail super fund and industry super funds, they function the same way, you can see. Basically, if you go to costs, and you see the costs are again medium to high, and the cost is very low in self-managed fund and my super, because basically you're managing it. And then if you go to relative complexity, you can see it flows down to high to basically to self-managed. Why? It's because established a super fund is basically establishing a trust, and you have to look into it. You have to contact an accountant or something, or a firm. You basically need to put your head in, right? Where other funds, you just nominate and they do everything by themselves. They talk to each other, and then they drag money from here to the other fund. So yeah, this is basically an overview that I've just did today. And we'll try to elaborate next week more into this, dig into more about this. So rather than going through the history and everything, we'll dig into some sort of indication to get you a proper idea of whether you need to change your superannuation fund, or you need to stick into your guns and basically stay with the same superannuation fund and do contribution, and that can be your thing. So thank you very much, and thank you, Lakal.
Thank you, Sheehan. Thanks for that. That's very informative. And then this is just a part one, right? So we're going to discuss further, maybe last week and the week after. There'll be like 2 parts coming up. Is that correct?
Yeah, that's correct.
Yeah, okay. Okay, so let's look at the next topic, which is the technical charts, ascending, descending, symmetrical triangle. So Chamira just sent me a text message that he won't be able to make it today. So let's skip this one, and we can do this like probably next week. So we can move on to the next topic, which is the gold and silver chart. So Again, let me just quickly do a screen share. Yeah, so right now we're just looking at the gold USD chart. So gold price against USD. So as I say, like we discussed this in previous sessions, like, when you invest, it's very important to diversify your asset in few different asset classes. For example, you buy, say you have a property and then you got some gold, silver, physical, and then you have some cryptocurrencies, you put some money in the share market. So likewise, instead of putting all your money in one asset class, it's very important to have a diversified asset portfolio. There's three positives out of that. The number one, which you can mitigate risk, like, so in case if you put some money in one asset class, if it goes down by 50%, you tend to lose 50% of initial value. So if you diversify on few asset classes, one asset class might go down, but few other asset classes might go up. So you can, even if you're losing money from this side, from this asset class, you might make it from the other asset classes. So just to mitigate risk. And you can use diversification by taking profit. So let's say, for example, last year you put like 10,000 in Bitcoin and Bitcoin goes up to like 60K. And then you can take some profit, like you can take 30,000 out as profit. Because you are in, you put 10,000, you have $50,000 in profit. So you take 30,000 now, use that 30,000 profit to spread your profits among other asset classes. So you can use diversification to increase your wealth as well. And it's kind of like an insurance as well, just in case one asset class goes down for some reason, and then you don't need to worry because you have other asset classes as well. So what I notice most of the time, people put all their money in one asset class and then they tend to panic. Like, if someone says, oh, property market is going down by say 10, 20, 30%, right? If you put all your money, if you have like 4, 5, 6 investment properties, you tend to worry, right? So just to make sure that we have a level-headed mindset, so that we're not going to worry too much because you put all your money in one asset class. That's why we diversify among few asset classes. Same with Bitcoin. If you put all your money in there, then you won't be able to sleep at night, because if you see like a 50% correction next day, it's going to be hard, right? So that's why diversification is very important. So part of that, gold and silver is very important. Let's not forget, every asset class that we know of except property, everything is on the internet, right? Bitcoin, share market, most of these assets, like, on the internet. So it needs to have a running into like a proper internet connection, like, to function. But let's not forget, let's say, I mean, this is like a worst case scenario. I'm not going to say it's going to happen. Let's say, for example, some EMP attack or something like that, and then, or maybe like, the internet is hacked and then you have no access to the internet. In that kind of scenario, physical gold and physical silver will be really, really important. So let's not forget, this is a very important asset class you have to have in your asset portfolio. In case, say there's a hack, the internet is hacked or internet is down or something for some reason, or it could be any issue, then you have no access to your Bitcoin, you have no access to your shares, you have no access to your online banking. So everything is down. ATMs are not working. In that kind of scenario, holding physical gold and silver will be really, really important. I'm not saying this is going to happen. See, we discussed, like, for the worst case scenario. So it can happen. If it happens, you are prepared. If not, it's okay. You have some pretty good asset class which you can hold for long term. So let's quickly look at the Bitcoin price chart. So this is the gold versus USD price chart. So this is the daily chart. So I can change it to monthly chart because there's a pattern I want to look at. So as you can see here, there's a nice cup and handle pattern. This is like a bullish pattern. So this is the monthly chart. So one candle is like 1 month. So I'm not expecting this to pan out like, next month or in a couple of months. We might see a breakout probably next year. So when you see this kind of a chart, normally what happens, so this is the neck right here. So actually, let me redraw it. So let's say you start from here, go all the way like that. So this is like a certain chart pattern that we use. It's called cup and handle chart. So this is the cup, and then this is the handle. So when you see this kind of cup and handle price chart, normally what happens, price will break out towards the upside. It's a bullish chart pattern, and then we expect for the price to go up. So if this is the neckline, let's say this is the neckline, normally what happens, we just get this, so it's all the way here, and then let me just clone this one. Yeah, so this is the depth. So I clone the depth, and then when the breakout happens, so there'll be like a breakout happening from here, like in few months. Like this is a monthly chart, so one candle is 1 month. So if that happens, this is looking really bullish for gold. Like we might see gold go up all the way to like 2,500. So it's at 1,700, 780, something like that. So right now, buying gold is like if you believe this pattern is might work out in the future, you can buy at some gold right now, physical gold. Regardless, like part of the diversification, you can add some gold and you can buy some silver as well. So this one is looking really bullish. So this is not a bad time for us to invest in gold. We can quickly look at the gold silver chart as well. I already had a look. We discussed about this last week, but given that we have some like new people in the group, let me just quickly go through it. Yeah, so this is the gold and silver chart. Yeah, so this is gold versus silver. So gold / silver. Yeah, so when this ratio is high up here, when at like say, as you can see here, it just hit like 125 in 2020 March, so during the pandemic. So that was the best time for us to buy silver, because against when you see higher prices on this chart, that means against gold, silver is really low, right? And if you see right now, we are over here in this area. This is like it's saying it's a very good time for us to buy gold. So here, compared to gold, silver is overvalued. And right here, compared to silver, gold is overvalued. So what people normally do here, they just switch gold to silver, and then or they just buy more silver. Or here, what they do, they just switch silver to gold. And because in this area, if you hold in silver will buy more gold. So you can do that and swap. And then if you see RSI, this is the RSI that I mentioned earlier. So RSI, when it's at low levels, that's a good time to buy gold. When the RSI is at high levels right here, right, that's the good time for us to accumulate silver. So this is the gold and silver chart. Yeah, so let's look at the next topic, which is I think it's about Dow Jones. Yeah, so let's look at Dow Jones as well. There's a reason why, I mean, we could have gone and look at the Bitcoin chart straight away, but the reason why we look at the overall market, gold, silver, share market, because it matters. If we see like a 10 to 20% correction in the share market, Dow Jones or NASDAQ, that will affect the price of Bitcoin. So that's why we need to have like a overall idea of what's happening around the world, so that if you see like a correction, then we know, okay, maybe it's not a good time to get into Bitcoin, or maybe it's a good time to get into Bitcoin. So let's quickly look at the Dow Jones chart as well. I think it just made like an all-time highs recently, so which is bullish. Where's Dow Jones? Yeah. So right now, as you can see here, it's at all-time highs, which is really bullish. So we can expect higher prices as long as it's not going to break below this level. So this is the second highest we've seen in August, on August 16th. So it's right there at the moment. So it's not, it hasn't decisively gone above that level. It's just sitting just right there, like probably few percent, like maybe 200 points up. So the last high it's like 3,530, and right now it's at 3,520. This could be deceiving. Sometimes we see something like that and people get overly bullish, thinking, okay, looks like if we are breaking higher and people will get in, and when that happens we might see it comes down. So we call it this like a bull trap. So it looks like a start of a bull market, but it's a bull trap. If that happens, if it comes back down, then we might see and comes back down, and then if it goes below these levels right here, it's not going to be good for Bitcoin or for the share market, overall share market. It cannot break this low. So even if it comes back down, it has to hold this low. If it breaks this low, then we might see a 10 to 20% correction in the share market. But if we see that, we'll see it'll affect the Bitcoin price, because a lot of traders, they hold Bitcoin and gold as a hedge against the share market. So if you see Dow Jones and NASDAQ, they're crashing down, they're probably forced to sell their Bitcoin and gold in order to cover their losses. So that's what we've seen in the past. So Dow Jones, yes, at the moment, price-wise, it's just at all-time highs, which is like 200 points up. So we have to wait and see what will happen in the next week or two. As long as it stay about there, things will be fine. We might see higher Bitcoin prices as well. So that's the update on Dow Jones. Yeah, so we can quickly, now we can have a look at Bitcoin price action, I guess. Yeah, okay, let's go to Bitcoin right now. Oh yeah, so any questions you guys have, you can message me on you can, there's a chat group here. You can, if you have any questions, you can put it over there, or you can ask me any questions so far before I look at the Bitcoin price. No questions? All right, perfect. Okay, so just a quick overview. So we remember Bitcoin just dropped to 30K, and then since then it just pumped all the way up to 52, and then as you can see here, it's like a steep line right there, and it broke this line and then still kept on going up, and then it got rejected at 52,000, and then we had like about 25% drop from the top from here. Yeah, about 25% drop. And then I was actually expecting for it to go down a lot further, like that's what normally happens, but because of this ETF news, it just keep on pumping the other way. So this is something I did not expect. But around this, during this pump, I actually sold most of my coins, just in case, especially my old coins. I just sold and took some money out in case, because I was expecting for it to dump. But when it reverse and start going back up, I did not get back in, because I did not feel like it's a good time to get in. So I just kind of like worried. But right now things looking a bit bullish, but still, as I said, looking at the at Dow Jones, it's not. It could be a bull trap, so you got to be careful. But I got back in a little bit, but I'm still like 50-50, just to see what happens. So I'm holding a lot of USDC at the moment just to buy back if the price comes down. But right now we dropped nearly 1,100 points, but I'm pretty sure as soon as it goes below 60K, it'll be bought back. So that's what I believe. But next support will be around 57,000. So if it breaks 60K, and then we might see it come to like 57,500. If it breaks that, then the next support will be 52,000, which is right over here. So next support will be like somewhere over here, 57, right, somewhere over there. Yeah, so I mean, this is the, I'm not saying it's going to go down. I'm saying if that happens, this is the price. This is where we might see a support for Bitcoin price. So it might bounce back, hit 57, and we might see a bounce back. If not, if it breaks 57, then we might see it comes all the way back down to 52. And if it breaks 52, then things are not looking good. Like we might see the next support, so 200-day moving average, which is like a bull market support. So this one right here is a bull market support. So we call it bull market support. It's a 200-day moving average. So as long as Bitcoin is above this level, we can call it a bull market. This line, right? This blue line right here. Yeah, 45. So as long as we are above this 200-day moving average, we can technically call it a bull market. So right now it's pretty obvious it's above 200-day moving average, like probably a lot higher. But if it breaks 57 and then 52 and it comes back down to retest, normally what happens, it comes back and retest 200-day moving average before it going higher. It could come and find support over here and then it could go up. But in case if it breaks that, then it's not good. When technically we are back in a bear market, then we might see all coins get like sold off like a lot harder compared to Bitcoin. So that's a bit of a worry. If it goes back the other if it's like a downtrend. But if you look at the uptrend, it needs to break about this level 63. So yeah, on the way up, it has to break about 63,500. Needs to break about that, and then it has to hold the price above 63,500 for us to be bullish. And then next one would be like all-time highs, which is like 66,000 or so. That's the price action on Bitcoin at the moment. And as you can see here, RSI, it's kind of this area was like kind of overbought. So RSI is relative strength index. It's like a very helpful indicator. So every time you see RSI above 70, this is 70 mark. And then every time you see RSI above 70, that means it's in overbought territory. So that means there's a high chance the price might come down. So that's what we've seen so far. Towards the ETF news, we've seen this is like a lot steeper. As you can see here, we can see like a massive price pump. And then as soon as it broke, it just dropped by probably 10 to 12% or so. So from here, it dropped about like 13%. But over here, when it broke this trend line, it dropped actually from the top about 25%. So if we drop from all-time highs 25%, it will probably come back down to 52. 20% will be like 52 and might hold 52 as support. So this might happen. If that happens, it's still good. Like we are still in a bull market because it's over $45,000. As long as we are above $45,000, we are in a bull market. If it breaks that, then things are not looking good. We might call it a bear market. So we have to wait and see what happens. And as you can see, this is a good thing. We already seen RSI relative strength has cooled off a bit. Over here, it has come down significantly. It's sitting at around 50. So this is like neutral, not so bullish, not so bearish. So who knows, maybe next week we might see like a bigger pump above 63,500, which is like the resistance line at the moment. So that's the quick update on Bitcoin. So do you guys have any questions regards to Bitcoin price? Or any questions you want to ask? Okay, we can quickly look at some altcoin. So last week we discussed a lot of altcoins: XRP, XLM, Digibyte, SLP, and what else? WET. We looked at WET, QNT. Yeah. So let's quickly go through some coins right now. This one right here, QNT. I know this is an expensive coin, but let's not forget the coin supply is really low. So that's why the price is expensive. It's the max supply would be like 14 million, is less than Bitcoin max supply. So this is like a really low cap. I mean, the coin supply is really low. So normally what happens when the coin supply is really low, if there's like a massive demand for this coin, price tend to go up like, in a massive way. So this is something that I've been accumulating. So before I start any of these coins that we discuss, including Bitcoin, in none of these financial advice. So you have to do your due diligence. Just don't buy anything just because I say so. Okay, so now that we got that out of the way, okay, so yeah, so this one is there's like a clear trend line here. It's on that trend line right now. So I'm not expecting this one to break out like soon. Like we have about, I would say, from now, this is the daily chart. So we have about maybe, yeah, another 37. So maybe like a month or so, it needs to consolidate unless Bitcoin goes up like crazy. Like this might turn back around and then start going up. So this is the QNT against USDT chart. So it's looking good. And if you look at the RSI, it's not overbought in overbought territory. It's kind of like going back down now. We might see, if Bitcoin keeps on dropping, we might see lower prices for QNT. So right now the RSI is like 42. So it's like somewhere in the middle. So can you guys hear me? Sheehan, can you hear me?
Yes, we can hear you.
Okay. So that's all good. So yeah, so QNT, and then let's look at this coin against ETH, because this is like a Ethereum. It's a ERC20 token. So if it's a ERC20 token, we can look at the price action against ETH. So let's look at QNT/ETH. Yeah, so against ETH, it's looking good. But we can wait for some time for it to come back down. I just started accumulating a little by little. I started like DCAing. I started DCAing, so I'll do more DCA as soon as if it drops a lot lower. But this could be like a really good like a support line, which is like from 0.05 against Ethereum. So as you can see here, see against Ethereum chart. So, and because previously we've seen there's a lot of support in this area. So maybe it might come back down because there's a lot of support here as well. Let me just draw it for you so it's easier. See, yeah, so we have support around this area. So it looks like it's breaking down. So if it breaks below, the next support would be somewhere near this yellow bar. So that would be around like 0.05. So if it comes over there, that would be like a really good opportunity, but we never know it's going to go there. So I started DCAing this coin right now. So if it comes down, I'll just keep on adding. And then again, if you look at the RSI, it's looking really good. RSI is pretty low as well. It's somewhere near against Ethereum. This coin is undervalued. So RSI is like somewhere near 32. So against Ethereum, it's really undervalued. So this is something you can accumulate. I know it's expensive. The price is expensive. It's like $300 or so USD, but the price is expensive. I think 275 or something. They're expensive because there's less coin supply. But I have a feeling this coin has a lot of potential to go up, given that the market circulating supply is very less compared to other coins. So this is QNT, and we can also look at
Lakal is the QNT project. Quick question. So is it a new one, or has it been there for since last bull cycle from 2017-18?
No, this is a fairly new token, but fundamentals are really good. I heard like a lot of people talking about this, like it's a good project. And if you look at the price, it used to be around $3 probably last year, around maybe September, October, before the bull market. So from $3 to $300 is 100x, but still, then you might think, oh my God, maybe it's overvalued. But the thing is, the circulating coin supply is less compared to other coins. It's an expensive coin, but I'll slowly gonna accumulate this coin because it's kind of look undervalued against Bitcoin. Hopefully, Bitcoin is not gonna drop so much. Like if Bitcoin drops so much, you will see these coins will drop a lot harder. So I hope I answered your question.
Yeah, thank you.
Yeah, and yeah, so this one, because like when you invest, like don't go for like micro cap coins. Like let's say you want to invest $10,000. It's not a good idea to go and buy like micro cap coins, like with a very low market cap, because the problem is they might, like when they pump, I know they just go up by 5, 6, 10 times, right? But it might not happen because they probably don't have much better fundamentals. They don't have like a much better community. They don't have a lot of plans in the future. It could be like a scam. So the best way to do it, you have some Bitcoin and have some Ethereum, say 30 to 40% Bitcoin. So majority of your portfolio should be in Bitcoin because it's the safest coin out there. So 30 to 40% in Bitcoin, even 50% is okay. And then another 20 to 30% in Ethereum. Then you can look at large cap, like something like XRP. Then you can look at Cardano, Solana. You can look at Solana as well. It's kind of overvalued at the moment compared to other ones. ADA is kind of undervalued at the moment because it had a massive run, so it's consolidating. We can keep an eye on it and accumulate it later. QNT, of course, is something that you can always look at. Like you can DCA if you want to. I know it's expensive coin. And then let's look at this coin. It's called SLP. This is a really cheap coin. This is the chart against Ethereum. So against Ethereum, as you can see, this coin has dropped so much. Like if you go to the weekly chart, it dropped like 12 weeks, 3 months in a row, it dropped against Ethereum. So this is something that I'm accumulating. And then if you can see here, RSI kind of like, so relative strength is kind of going up when the price is going down. So this is like a bullish divergence. So that means according to RSI, it's saying price is about to go up. So this is probably 8 cents at the moment. So I discussed about this coin last week and the week before as well. So this is something I've already accumulated. Like if it goes down, I'll accumulate more in the future. So this is like a pretty good coin. It's called SLP. It's on Binance if you want to buy it. So I'll probably buy these coins and hold it for long term, expecting Bitcoin to have like higher prices. So we have this question mark still. Bitcoin up to 65K, went down to 30K, and went back up to 67, and now it's around 60K. So it's a bit of a worry because we want to see Bitcoin next week, by the probably end of next week, we want to see Bitcoin goes higher, above 63,000. Otherwise, there's a bit of a question mark. If it goes down lot lower, below 45K, then accumulating these coins right now is not a good thing. So that's why you don't go all in, right? So let's say you plan to invest 5,000 in this coin SLP, right? So what you do, you just put like only 1,000 to 2,000, like no more than 20 to 30%. 30% of your coin of your initial investment you invest right now in this coin, but the rest, like the 3,000, you just keep it aside in case, just to see what happens. But once we've seen Bitcoin goes up above 63,500 and beyond 67,000, like and then start going like for price discovery, then it's a lot safer because Bitcoin has already gone up, and then there's like less worry for us, right? Because we don't want to see Bitcoin goes down like down below 45K, and then these coins will drop a lot harder. So accumulating all coins right now is too risky, as long as you're not going to go all in. So you can DCA a little bit, like 30%, 10%, 20%, 5%. You can accumulate little by little, and if Bitcoin goes down, perfect, you can accumulate more. And if Bitcoin is cheap as well, you can accumulate Bitcoin plus these altcoins. But let's not forget, when Bitcoin drops 10-20%, altcoins tend to drop like 30, 40, 50, sometimes 60%. Some altcoins hasn't reached its all-time high since last April. Like some of them are down, probably like still down 50%, 60%. So this is what happened. This is the risk that you take holding a lot of altcoins. So that's why it's better to have at least 50 to 60% of your portfolio in Bitcoin, because if something goes wrong, even if Bitcoin goes down, you can still hold it for long term. Because some of these coins you can buy and hold, maybe it could be like a scam, maybe it's like a short, people just came up with this idea for like a short-term pump, right? And then it might just die, and then you lose all your money. So that's why it's better to have more money in Bitcoin. So right now, there's a bit of a question mark on Bitcoin price. Hopefully next week it'll go about 63,000. Once that has happened, we can aggressively accumulate more altcoins. So SLP is something that I'm more looking at. I already got some. I'm going to keep on accumulating regardless of the Bitcoin price, but I'm not going to go all in. Like, I always keep some USDC aside in case if Bitcoin drops and we go into bear market. I have more firepower to buy more Bitcoin. So when the Bitcoin goes down, I'll add Bitcoin. If Bitcoin goes up, I'm not going to worry about Bitcoin. I'll just add some altcoins. That's the strategy. That's what I'm following right now. So this is the SLP USD chart. Even this one is still looking good. As you can see, RSI is rising and the price is kind of like flat. It's going up, but not as much as the RSI. This is like a very bullish indicator, like we call it like bullish divergence. So that means people are accumulating this coin right now. So we might see this might pop soon, depending on Bitcoin price. Everything I say here, everything we discuss about altcoins, it all depends on what Bitcoin does. If Bitcoin drops like 30-40%, forget it. These coins will drop a lot harder. So last time this coin pumped actually from the breakout point about 200%. So it's not too bad. Right now, yeah, so if it breaks all-time highs, might go a lot higher. Okay, so there are not a few other altcoins.
I think Lakal, there's a point as well, which I think I'd like to add something to your the description you gave about Bitcoin pricing. I think if you check the last bull to bear cycle to this new cycle, you can see the Bitcoin. If you check the Bitcoin fluctuation, yes, it has gone down, but comparatively with the altcoins, it has stable in a certain level. So if someone has bought down Bitcoin, in a different, like, in say 2017 to a certain level, say 5,000 or something, they still were better off during the bear market because they were going like, 10, 20K and again 5K, 3K, but still you had opportunities to sell off if you want to go out from the market. But if you're holding altcoins, which I terribly know what happened to me, right? Basically, if you hold altcoins and you learn these lessons as you go on, you never get up until the new bull cycle comes up. So there's always that risk. So I agree with you 100%.
Yeah, that's why we better have at least 50%. I know even 40% is not enough. As I said earlier, we better have 50% Bitcoin, because something goes wrong, at least you have your Bitcoin and then Ethereum. So as Ethereum as well. So this is the Ethereum chart. Again, it's similar to what Bitcoin has done recently. So Ethereum is a really good coin. Like, I recently, just before the breakout, I bought some Ethereum actually. But again, it's a bit of a worry, because this is the all-time highs in 12th May. Is it 12th May? Yeah, 12th May this year. And right now we just gone back above like slightly, and then we are back down again. So I would like to see Ethereum price just consolidate here for some time like that, and then probably break out like this. So that's what I'm not exactly like that, but something similar. So that's what I would like to see, because now there's a bit, see, I'm always like I would like to be cautious, right? Right now, people, I know a lot of YouTubers, like, they are so bullish, and then they're expecting like a lot higher prices, 100K in December. That's all good, no problem. But in this kind of scenario, I just would like to see some confirmation. Normally, what happens, this is all-time high, so it's not easy to break all-time highs. We've seen it just tried once right here. It tried to break all-time highs right there, and it failed, came back down. So this is the second attempt, and that's gone about 4400, which is all-time highs. But right now it's gone back down again. So now we want to see it consolidate below these prices. So as long as Bitcoin is not going to go down, so it has to stay about like 42,000 for Ethereum, and then we have to make sure that it goes up like that, and then come back down and go back up again like that, like come down back again, and then make like a ascending triangle, which is like something like this, and then price keeps on going up in this ascending triangle, and then finally breaks out from here. So this is what we want to see. As long as Bitcoin is not gonna do anything crazy, not gonna go below 57,000 or something, and then we'll see like a breakout, a bigger breakout, and then probably come back and retest the support, and before it going a lot higher. So right now, because in the past we have seen so many breakouts like that near all-time highs, and they are just fake outs. Like it looked as if like it's going to break out and going to go for a lot higher prices, but it's just like a bull trap. It looks as if it's going to break out, and then next thing we know, it just Bitcoin drops and it comes all the way back down and it reaches these lower levels. So we don't want to see that happen. So yeah, so it's consolidating. Bitcoin is kind of at the same boat, like it's kind of like consolidating as well. But I want to see Bitcoin goes up above 63,500 a lot sooner. Then we all can be bullish, and then when I would like to see some confirmation, break above, come back down, retest, and then now we'll be a lot comfortable to accumulate more altcoins. So buying altcoins right now is risky, as I mentioned earlier. So don't go all in. And if Bitcoin goes down, your altcoin will drop by 30, 40, 50%. And then you have to hold these altcoins like, until Bitcoin breaks above all-time highs. So that's Ethereum price. So we already discussed Bitcoin. And XRP, XRP was looking good until just Bitcoin just dropped right now. So normally in the past, what we've seen, like this kind of patterns, like big patterns like that, it just consolidate in between, and then right at the end, only for XRP. Normally, if you see this kind of a symmetrical triangle, normally once it's like 70% is completed. So let's say from here up to here. Normally, so this is like, when it comes all the way up to, so this is, it's not going to go all the way. Normally, like somewhere over here, 70% of the triangle, we'll see like a breakout, but not for XRP. XRP goes all the way to the corner, like to the, to where these lines meet, and then that's when we see like a massive breakout. So maybe we can have a look at that chart. If we have enough information. As an example, let me have a look. We have more information. Yeah, just enough data, I guess. Oh, no, not on this one. Okay, need to find a different chart. I'll show it to you. Give me a sec. XRP. Yeah, here. Yeah, so as you can see here, okay. See, this is for XRP. So it just kept on consolidating in between this, in this pennant, symmetrical pennant, and then we see like a massive breakout. So this is what XRP does. It just goes up crazy. So from this breakout point, it just pumped all-time high, like all the way up of the top, like 11,000, 12x. So from here, it just pumped 12 times. So this is like the way XRP, it just sometimes it just pumps like, crazy. Like, so that's why it's like a really good large coin, large cap coin to hold. So if you look at here, like, if you compare these triangles, as you can see here, this one here is quite similar to what we see here at the moment. So right now, so it looks like it's kind of very similar. Like, maybe in few days we might see, or maybe it might come back down, depending on Bitcoin. If Bitcoin drops, then we might see, like, it drops back down to this middle line right here, and then consolidate for some time before breaking out a lot higher. So it kind of looks similar. It's a really good large cap altcoin to have on your portfolio, because when it goes up, it just goes up crazy. So that's XRP. Again, right now, be careful, don't go all in, just like accumulate 10-20% and expect Bitcoin to break above 63,500. If Bitcoin goes down, you can accumulate Bitcoin. If Bitcoin goes up, you can accumulate all coins. So this is what I'm trying to do, because it's no point chasing Bitcoin if Bitcoin is so expensive. So these are the coins. Yeah, Link. Yeah, I need to mention Link as well. So Link, we already discussed about Link last week. So this is the Link BTC, Link USD chart. Oh, no, this one. Yeah, this one here. Yeah. So we draw these lines like last Sunday. So this is like we can call it like a bullish pennant. Sorry, ascending triangle, where you can see the price is going up, and it's trying to break about this 32 level, and it failed like few times. So that's what happens normally, like trying to break this 32 level. So we had like one failed, and then second time it failed, and third time it might come back down here and then break about this level, and then probably come back and retest before it going higher. So we might see this like also a cup and handle pattern forming as well. So it looks bullish. This is USDT, link against USDT. So if you look at USDT link up against ETH chart, it's probably, as you can see here, against ETH, it's just undervalued, a lot undervalued. So this is, and RSI, if you just look at the weekly chart as well, you can see RSI is kind of like flat, but the price is going down so much. So that's something bullish as well. So RSI is not, strength is not going down so much, but yeah, relative strength is not down, but price is going down a lot harder. So and against Ethereum, it's not a bad time to accumulate, as long as Bitcoin is not going to do anything crazy. So I've been accumulating a little bit of Link here and there. So in the future, I'll just, if I see Bitcoin above 63,500, then I feel more comfortable to add more money to these altcoins. So this is like a large cap coin as well. I have a lot of potential. We can also look at the Link versus against BTC, and it's pretty much down. So even RSI is not at overbought or anything like that. So it's okay to accumulate this coin as long as Bitcoin is not going to do anything crazy. So don't go all in. You can accumulate for long term, 10%, 20% of your allocation. So these are not bad times to accumulate these coins, expecting Bitcoin price to go higher. So that's Link. So we discussed few altcoins at the moment, and then I can also look at Digibyte. Yeah, so this is like a low cap coin. So let's not forget, we'll first see Bitcoin pumps, and people take profits from Bitcoin, and then they buy Ethereum, and then Ethereum pumps, and then they take profits from Ethereum, and they go into large cap, mid cap, low cap. So holding these coins, there's like opportunity cost, meaning you have to wait and you have to buy and hold these coins for a long time to see higher gains, because they will pump. If you think about micro cap coins, right, they're going to pump at the end when everything has gone up. People got nothing else to buy, then they come to like small coins. So that's what normally happens. This one DGB is kind of against USDT. It has come down a lot, and the RSI is not at like overboard level, so it's okay to accumulate this coin as long as Bitcoin not going to do anything crazy. So let's look at this DigiByte against BTC. So yeah, so it at really low levels. As you can see here, every time it went back to this trend line, it has like a massive pump. Percentage wise, from here to there, about 5x, 500%, and over here about 350%, so 3.5 times. So it has come all the way back down to this line now. Hopefully it's not going to break below. If it breaks below, we'll see a lot lower prices. And RSI against BTC is not too bad either. So this area is not too bad to accumulate. It's like and you can see it's kind of like curving, kind of going back up. So maybe there's kind of bullishness, and there's also bullish divergence on this chart as well. So DigiByte is all going to accumulate, like DCA DigiByte if you want to, as long as Bitcoin's not going to do something crazy. So don't go all in. Be careful, like protect your wealth, protect your capital. So it's very important. If once Bitcoin has gone above 63,500, then we can buy, get into more altcoins. And when Bitcoin goes up crazy, altcoins tend to bleed a little bit, right? So that's like a really good opportunity for us to either convert Bitcoin to altcoins or accumulate more Bitcoin just to maximize your profits in the future. Okay, so that's it. I think that's in those are the altcoins that I want to discuss. Yeah, and then also Stellar, like every time when XRP pounds, these tend to pump as well. So it has resistance around 40 cents or so. As soon as it breaks 40 cents and come back and retest, then we probably see higher prices. So a lot of altcoins has a similar kind of a chart pattern. Like most of them are still down from its all-time highs. See, this one went down probably like 75% down, and now it recovered, and now it's still 50% down. So a lot of altcoins. So if you sold these altcoins back in May, right, you would have got a lot of money for these altcoins. So they are still 50% down compared to what we see in what the prices we seen in May this year. So these ones have, if Bitcoin goes up higher, these coins got a lot of room to go higher, depending on what Bitcoin does. Okay, so yeah, HBAR is like another coin. I mean, I'm just discussing all these coins, like it might not be your favorite coin, but I'm not saying you need to have all of them. Maybe Bitcoin and Ethereum, and you can have probably another 4 to 5 altcoins, like maybe 2 to 3 large cap, 1 to 2 mid cap, and like 1 to 2 small cap. And if you want, you can add some micro cap as well, like a couple of them. So Bitcoin and Ethereum, maybe another 4 to 5 altcoins, large, medium, low, small cap, and micro cap. So like, because it's like a really nice diversified portfolio. So because you're not going to see 10x gain from Bitcoin right now, but if you buy something like SLP, it might 10x from these values, because the micro cap is a small coin. So it's better to have the range of coins starting from Bitcoin, Ethereum, large cap, mid cap, and small cap, and micro cap likewise. So it's a diversified crypto portfolio. It's better to have it like that. Also, you have, regardless, either we are in like a massive bull market, it's always better to have some USDC just in case something goes wrong. Because when you buy this, when we buy these altcoins and Bitcoin, Ethereum, we're expecting higher prices, like in few months' time. What if it's not happen, right? That's why we always have some USDT. So even in a massive bull market, I still had like a lot of USDC sitting on the sidelines just in case like something goes wrong. See, for example, if Bitcoin drops below 45K, we kind of like technically back in a bear market. If that happens, if we have a lot of USDC, like AUD, then you can use that to buy more Bitcoin and increase your Bitcoin holdings. So that's the best strategy. So never go all in, because if it goes down by 50%, you panic sell, you tend to lose 50% of your initial investment. Okay, Matic, you can also look at Matic as well. It's kind of like gone up a bit too much. So if you look at the daily chart, I just looked at it recently and see the RSI has gone up to 80, 78 or so. So I'm not gonna I'm not gonna buy any. I'm not gonna accumulate any Matic at the moment. I would like to see this RSI kind of like go back down here around this area, where we might see Matic comes back down to like 160 to 170. Around 160 or so, that would be like a really good area to get back, accumulate Matic. This has a lot of good fundamentals for the future. So it is all right going to accumulate, but right now it's a bit overvalued. So I'm not going to buy Matic at the moment. So any of these altcoins, you can pick maybe Bitcoin, Ethereum, and another 5 coins and hold it like that. No need to buy all of them. End of the day, like it's the same thing, right? Whatever coin you buy, if you want to double your money, it doesn't matter what kind of a coin you buy. It could be Ethereum, Bitcoin, Cardano, or it could be QNT. Doesn't really matter. You just want to double your money. As long as you double your money, who cares like what kind of coin you hold? So that's how I look at the market. So I don't care what kind of asset class it is. So my focus is to double my money or get like 2x, 3x or whatever. And once I've seen that, I'll just take profit out. I'll just DCA sell, not going to sell everything, DCA sell. So also I just want to quickly explain the RSI, as I mentioned earlier over there. When you DCA, I said you start from higher prices. So this is the RSI. So as you can see here, this one is overvalued at the moment. So even the price is overvalued. So let's say you want to accumulate Matic, and according to what I explained earlier on the Word document, how to DCA, you can start adding little bit of Matic right now, and then along the way down, when the price goes down from here, let's say it comes back down to this level, and then you'll probably see RSI go down as well. So RSI high to low, you can accumulate, you can DCA, DVA, depending on your target, right? How much you want to put in, depending on Bitcoin, what Bitcoin does. So that's what I said, like you start from a higher price and then you keep on DCing all the way down. Either you can buy similar investment, you can invest like similar amount of money, or along the way, like when it goes down, you can add more, like instead of putting like 500 each, if Matic goes down to say 160, 150, you just put like $750,000, because the price is going down and the RSI is going down as well at the same time. When the price is down, the risk is low, like there's low risk. When the price is high, the risk is high, right? And the RSI is high, the risk is high. At those kind of points, you're not going to put too much money because there's a lot of downside. So, but when the RSI is low, oversold, the price is down as well, that's where you're comfortable to add more money, add more coins to your portfolio. So that's what I meant earlier by DCA, which is really important as well. So this is RSI high. So right now it's RSI high. So in the coming few weeks or coming few days, we might see it drops down a bit. So you can accumulate along the way. I'm trying to use this as an example, how to DCA, DVA. Yeah, so those are the old coins so far. So anything else you guys want to ask?
Well, I'd like to add something there. I think for a beginner, what you mentioned, Lakal, a DCA is a very good strategy because you don't need to think, someone can say, for my pay every fortnight, if I get a payout fortnightly, they start saying, I'm going to spend $100 for shares or crypto or whatever, right? Yeah. So that's a DCA point that you do. You don't think, you just do it. And I mean, we can probably elaborate next week or something, how Bitcoin works. Bitcoin worked out with DCA, it was perfect. So basically, you go with that, and then overall you get somewhere. And as you mentioned in your previous slide that you showed us, the DVA, I guess someone needs to basically be in the market a little bit, because how do you know this is the lower time, this is the higher time? If someone just says, I'm going to put something on, every pay packet and then forget about the market, and that is a strategy where someone used to use. If you're interested, if you're checking the market, then you know when it's high, when it's low, you know, you can do exactly what you mentioned in your slide, I guess. So I think it depends on which category you fall under.
Yeah, so let me bring it out. That's a good point, actually. So let me just share the screen again. Yeah, so let's not forget. So the plan is to invest 4,000, right? But we're not gonna invest all of that. So that's why we do it just in case. So our plan, you guys can see this Word document. Sheehan, can you see it?
Yeah, we can see.
Yeah. Okay, so that's why. So that was a good point. So if you're DCAing, like, you know, there's no problem. Like, you know, no matter what the price is, you can just put like 500. Even the price is up, you can still just put like 500. Forget about the chart. You don't need to do a lot of work. But DVA, you might need to, like, you know, look at the price, and then the price is low. If it dips a lot lower, you can add more. That's what we do here. See over here, we just buying more XRP as example, like, you know, at 70 cents, right? But still, you could be wrong, right? That's why out of $4,000, we're not going to go all in. So this is very important. So that's why I have 3,000 here. So 3,000 here, 3,000. So let's say you are wrong, right? And then XRP dips below 70 and it goes to like 60 cents. You still have another $4,000 just in case. So you probably take another 500 and add that and use that to buy XRP. So that's why I said it's regardless of the market condition. It could be a bull market, bear market. You always have some AUD, USDT, USDC set aside just in case if you're wrong, right? Because I mean, as I always say, you are always 50% right, and that's a guarantee, right? You could be 50% wrong. So whatever your mind says, you are 50% right, 50% wrong. If you are wrong, you are prepared for it, right? Either you are wrong, you're right. Like that, there's nothing else. So that's why you invest 3,000 and you hold like $1,000 just in case. If the price dips lower, you use that $1,000 to accumulate more. So you can do it like that.
Yep, thank you.
Yeah. Okay, so you guys have any questions? Anyone else has any other questions about all coins or cryptocurrency or gold, silver, markers, anything like that? You can ask, like, you know, if I know, I can explain, or someone else can explain to you. Okay, then. So I hope I covered enough. So it's pretty good. Like, it's a pretty good session. We discuss a lot. Yeah. So let's call it a day, and then I'll just message you guys in the group. We can have a bit of a chat and then decide what we're gonna discuss next week. Yeah, so let's call it a day then. Thanks for your time, guys. Sheehan, thanks for explaining us about superannuation. That was really informative.
Thank you. Thank
you. Thank you very much.
Thank you, guys. So I'll see you guys probably next Sunday.
Yeah. Have a good night.
Thank you, guys. Okay, then.
See ya.
All the best. Bye. See ya.
Bye.
She's saying, Mommy
Mommy and Daddy.